Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and I'm here to give you a quick look at our top stories for the week. Gold was in focus this week as the U.S. Federal Reserve met for the first time in 2024. As was widely expected, the central bank left rates unchanged at 5.25 to 5.5% and indicated that it's likely to do the same at its next meeting in March. Speaking in a January 31st press conference, Chair Jerome Powell said that before it cuts, the Fed wants to see more evidence that confirms inflation is heading in the right direction. He also said he doesn't yet believe a soft landing is guaranteed. Gold fell in the immediate aftermath of the meeting, sinking to just above $20.30 per ounce. However, it's since recovered and was close to $20.60 at the time of this recording on February 1st. Many gold market participants believe the yellow metal will stage a true breakout once the Fed starts lowering rates. We also saw a couple of interesting developments in the silver space this week. On January 30th, the Silver Institute said it's forecasting silver demand of 1.2 billion ounces in 2024. Which would be the second highest amount ever if achieved. The organization points to strong industrial use as a key demand driver and is projecting a silver deficit of 176 million ounces this year. That would be 9% lower than 2023's 194 million ounce deficit, but still very high compared to previous years. Also on the silver side, this week a group of company executives wrote to the Canadian government to recommend that the country recognize the white metal as a critical mineral. The document focuses on silver's role in the low-carbon and digital future, but also highlights tight supply. I'll leave a link to the letter in the video description if you want to learn more. Uranium investors got a piece of news they've been waiting for on February 1st when Kazatomprom officially cut its 2024 production guidance. The company is now expecting to produce 54 to 58 million pounds of U3O8 for the year, down from its previous forecast of 65 to 66 million pounds. The amount is also 20% lower than the maximum output levels laid out in its subsoil use deal. Kazatomprom warned on January 12th that it was expecting to adjust its 2024 guidance, so this week's confirmation is no surprise. At the time, the company pointed to challenges obtaining sulfuric acid, as well as delays in completing construction works at newly developed deposits. However, it said it was committed to meeting its 2024 delivery obligations. Uranium market watchers are taking the news as yet another positive catalyst in the commodity's seemingly unstoppable story. The Sprott Uranium Miners ETF and the Sprott Physical Uranium Trust were both on the rise at the time of this recording on February 1st, up about 10% in 5 days. I spoke about uranium with a number of experts at the recent Vancouver Resource Investment Conference, and although the market is moving quickly, I think they're still worth a watch. I'll leave the links below for interviews with Rick Roll, Lobo Tigre, and Gwen Preston. That's all for this week. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.